All right, everybody. This is Noah and John. We're from UrbanDigs. We're talking Manhattan, John, but we're talking it in a very different way today.
It's remote Manhattan. It is. So I think we're going to start out. I'm interested in talking about the markets, but let's talk about the main markets right now, which are the credit markets, the equities markets, and let's just kind of get an overview of what's happening out there, and then we're going to dive in and talk about real estate.
Yeah, that's a good idea, John. And I want, because usually we talk about real estate, and let's just talk about the fact that this is a plumbing. This is a short-term, tremendous financing plumbing problem. And if you look at the economic machine, the global economic machine as a bicycle,
Mhm.
the plumbing that we're talking about here is all those different gears that make the chain go. And there's a lot of different gears, and when those gears kind of lock up and those gears kind of seize up or stall, that's when you get big problem in the credit markets, and that's when you see credit spreads blowing out. I did a piece on this, John, about 3 weeks ago. I did a piece on this. If you go to YouTube and you go to UrbanDigs, right over here, I did a little piece saying watching credit spreads during stock sell-off a couple weeks ago, talking about this. And it's important that people understand because what's going on with the Federal Reserve and what's going on with all these liquidity injections, and they're backstopping these markets. They're trying to make those gears turn, because if those gears stop turning, we have a liquidity event, we have a credit event. It could be a major one. It could be a cascading domino thing. I mean, think entire sectors. What if the whole airline industry goes out? What if the whole hotel industry goes out? Right? These are the negative ramifications that they're trying to stop. So when you look at all the bailouts so far, it's really been monetary, right? It's been monetary side bailout. We have yet to see the fiscal side, but the monetary.
Let's just clarify. So monetary, you mean the Federal Reserve is lowering the interest rate that is charging banks to borrow from the Fed.
Well, that's already down to zero.
That's already down to zero. But that's the monetary side. Fiscal side means government giving money to people or government spending money on things directly.
Yeah, but on the monetary side, there's still a whole bunch more that happened. They basically did a $1.5 trillion backstop on the short-term repurchase markets, on the short-term financing markets, on those credit markets to make sure those wheels keep going. I don't think the banks are taking them yet, but it's there for them to take, and I'm sure they will once those spigots get open. And I think the only goal of that whole monetary, it was major, and they're going to start QE. And they're going to start buying. So you got debt monetization. They're going to start buying assets out of thin air, printing money, so to speak. That's about to happen on a major scale for corporate bonds. They're doing all these crazy things now. So they're doing all this. And I think it was really just to mitigate a credit event, because everyone's now worried about a credit event, a major credit event that would just exasperate this whole problem, and make it from like, let's kill this virus problem, outside of like, holy crap, let's not go into an economic depression problem.
Right.
So they are trying to take off the table. All right, don't worry, we're not going to allow a major credit event. I still think there's going to be some credit events, and there's going to be some ugly, closings and bankruptcies and ramifications there. But I think they're trying to avoid that Lehman, at this point, even greater than Lehman style kind of credit event type of collapse here. So that's what's going on so far. And now we're about to kick it into the government side, on the fiscal side, like you're saying, where they're going to start giving out money and deferring taxes and bailouts, and we're about to find out. It's going to be any time now, but it's massive.
Yeah,
it's massive. Trillions of $2 trillion, $3 trillion.
That's our guess. We don't know if it's massive. We assume it's massive, but I think what you're seeing right now in the markets is mainly a liquidity event. People are basically selling what they can because there are a lot of funds. There's a lot of banks that are holding assets that are incredibly illiquid that they can't sell. So because they can't sell those, they are selling what they can, and things that normally you wouldn't see going down are going down. So gold's getting hit, treasuries are getting hit, equities of course are getting hammered. It's just one of those things. Everything's just if you can sell it, you sell it.
And let's just look at what credit was showing. Again, we talked about this video right here, watching credit spreads during a stock sell-off, which explains this. You can go click on that on YouTube at UrbanDigs. But if you look at this chart right here, this was where it was telling you, and this is February 27th when we talked about it. And look where we are now. Look at these credit spreads, and we said, oh my God, if these credit spreads keep rising, it's just a bad sign. Yeah. So you're right. You're at this point right now where that's why you got the market's selling off and treasury yields are rising. Usually it's the other way around, and that's all dislocated. So it's a little scary right now. So I just wanted to explain to people what I think is going on is that we have the monetary side. Now we're about to have the fiscal side. And this is like, everyone needs to come together at this point. I mean, everything's shutting down. We expect it. I mean, for weeks or hopefully, I mean, the key is right now, keep this shutdown as short as possible. What's the duration of the shutdown? Keep it as short as possible, right? And secondly is what's the duration until peak virus containment? And what's the
these are still some major unknowns, and until there's a little more clarity on these, until we have more broad-based testing and understanding of what's actually happening, I don't think we're going to get any sort of direction in the markets until this is sort of clarified a little bit.
Right. So how is this
impacting?
It is a bummer. It is a bummer. But I don't know. I'm going to have faith. We have amazing scientists in this country, across the world. Everyone's trying to nail this thing right now. I'm hopeful that the ingenuity of these experts, these scientists, are going to shine through, and we're going to hopefully get something that's unexpected to help us mitigate this whole thing. And wishing everybody well and safe, and that's number one. But yeah, so that's what's going on on the under the hood kind of thing. Let's shift to Manhattan real estate.
All right.
You got Russ Putterman coming over here, and I like hearing Russ. He's going to dial in any minute. You know, you're just going to see him pop up over here. And I like Russ because he tells it like it is. He doesn't really BS anyone. He just, if everything's slowing down, it's going to slow down. And he popped.
There you go.
Hey, guys.
Hey, Russ. Thanks for joining us.
No worries. How you doing?
All right.
We're hanging in there, Russ. You tell us, man, what's going on in those front lines of Manhattan real estate? Tell everyone quickly who you are, how long you've been doing this, approximately how much production you do, so people know that you know what's going on out there. And tell us what's happening on those front lines.
Yeah, no, first of all, thanks, guys, for having me on. My name is Russ Putterman. I'm with Keller Williams in Manhattan. I've been in the business about 17 years, done a lot of different things and continue to do, from the investment and development world into the brokerage world on both the residential and commercial side. You know, we did about 50 million last year on our team. And this is not the spring selling market that we expected. That's for sure. You know, it's clear what's happening, in the world right now. And, as it relates to the real estate market, we have certainly a lot less activity that's happening out there. Open houses, few people are coming to. We're being really, really mindful with the buyers and the sellers that we're interacting with, whether it be to use proper hygiene and sanitization and having good qualifying calls before we're meeting people to make sure that nobody has been traveling to any of these hot zones or been around somebody who's not well on both sides.
So can I just jump in? Let me ask the people that are coming to these open houses, because I would think that if you're going to an open house in this environment, you're probably pretty serious about making a play for something, because this is really not the environment you want to just go out and, linger at open houses. So I'm curious, like the buyers that are coming through, are they like, I got to have a place, or what's the sort of the demographic here?
Yes, we're not getting people that are just, out for a Sunday stroll, for sure. I mean, there's activity still happening in the marketplace. I mean, I had a listing agreement signed over the weekend. I had a buyer sign a contract literally today. So things are still happening, albeit much slower. So anyone who is active is very serious about, where they want to be. I mean, people still need to buy and people still need to sell for different reasons. I think anyone out there today that's looking, just to sell to hit the top dollar, obviously is not doing that.
Yeah.
Hey, Russ, are your sellers asking you to not run open houses?
They actually haven't. Right now, many of the units that we are representing happen to be vacant. So that's not an issue for them. The other sellers are just asking us to be mindful about who's coming through. Again, the pre-qualification call is such a big deal. They're really making sure that we're doing that, and we want to do it for the safety, of both them and for the agents on our team. Making sure that people are protected.
Right. And you just said you had a deal signed recently. Are you, I mean, first off, it's great to see the market functioning. I mean, that's all we can hope for right now. We don't want a complete market shutdown. I just did a search right here 1 week, right over here, contract signed. We got 157. So you're one of 157. Well, so my question is there a noticeable negotiate discount going? I mean, there's got a little dislocation. I don't know how much. We can't tell where these deals are happening at. Are you noticing a little dislocation here? And if so, what sector is that in?
So a lot of the deals that are going into contract now, we're already in negotiation, before this sort of, got to the level that it is now. Ours, believe it or not, is actually over the asking price that I'm referring to. I think just like in any market, there's a supply and demand issue, right? So if people really want to be in a certain location or at a certain place, real estate is a unique asset. People will pay for it, even in a market where certainly there's a lot more buyer opportunity, that exists. So
right,
I think it's very dependent upon the deal.
Well, so let me ask you this: do you see a situation in which, I mean, there's so many unknowns out there that it's almost impossible to speculate. But like, one of the situations that I see could be sort of almost a buyer squeeze, which is that, with the current environment we're in, I can understand a lot of properties basically just coming off market and sellers holding off from listing because they want a little clarity on this. And there's still people in the buyer pool that have to act, and suddenly inventory shrunk by 20%. I don't know if that's the case, but I could kind of understand that might be a case if sellers are pushing off. And in that case, look, you're looking at an illiquid market and suddenly there's nothing to transact on. You might have to pay a premium for anything that looks good.
Yeah, look, I mean, I think that's a very, very interesting take on where the market is and where it might go. I think that certainly sellers that don't need to sell are not going to sell. But people, like I said before, people need to move for whatever reason. They want more space, they want less space, and they're going to be buying or selling in the same exact market, right? So if you're a seller and you're selling in this market, you're going to be in the same place to buy something. So if you're selling it for above the ask based upon what your notion is, I don't think that's going to be the case in most situations. Right. You're probably going to sell at a little bit of a discount. You're also going to be buying at a discount.
Right. Hey, John, I'm looking here. 364 listings came off last week.
Okay.
So, I mean, we don't have a monthly chart on off market, so I can't tell you what the frame of reference here is, but I think that's ticking up, as I guess you would expect, right? I mean, I kind of think that, listen, if inventory comes down and demand comes down, I mean, look, we're all expecting it to go down a little bit, but like John was saying, is buyers may not have as many options as they had before.
Yeah. Yeah, no, it's interesting. And certainly there are sellers that I've been in communication with. I mean, it's the middle of March, right? This is when a seller wants to be on the market, if they had their druthers, that are just, that are going to wait and see what happens. And that's fine. And then there are buyers that we are speaking to out there that, that need a place to live, right? So they're going to be looking to make that move. There are also buyers out there that are opportunistic, investor-driven buyers that are looking for that opportunity, which I believe will exist to some extent, over a moment in time. How long that moment lasts, I think is as good a guess as any.
Yeah. I think one of the ways that I sort of envision the current market is, I think, it's sort of a two-pronged thing. Like, I think the first prong is the virus prong, in which everything just kind of comes to a standstill. Buyers pause, sellers pause, and it's kind of it becomes just an illiquid market, and anything can happen in that. You can have people hitting bids way down low. You can have people taking offers way up high, just because that's the nature of the market. And you get what you can get. After that, whenever we come out of that, maybe it's June, July, I'm not quite sure. I imagine more people are going to be focused on the economy, and in that case, I can imagine the listings coming back onto the market, the sellers coming in. Maybe there's some people affected by the economy want to sell. The people who wanted to sell in March, as you were saying, are maybe trying to put their units back on the market. There might be some estate sales coming in. So I can imagine there that we might have a little bit more inventory seasonally in September, October, perhaps, than we would have normally. And I'm just curious on your views when you're talking to buyers and sellers about the markets now versus what they can expect in a couple months versus, should I wait to list or not? What's that conversation look like?
Yeah, it's hard, right? And each individual situation is different. Again, if you have to make a move, right, then the conversation goes a certain way, and you're going to look to, do your best that you can within the market. If you don't have to, then I think you're waiting. At least you're waiting. Even buyers that I've had conversations with, that are looking for an investment are saying, okay, well, let's take a look at where we are in 2 weeks, right? Let's at least digest this a little bit. But to your point about the liquidity in the market, and where we are in September, October, I do agree with you. I think we're going to have, assuming things, settle out over time, we will have inventory, to be looking at then. I also think that if you remember, back in 2009, the market then, what you described is sort of what happened then, right? There wasn't a lot going on. And if you had cash, you were getting deals done, and the deals were done substantially below the asking price because those are the only deals that can get done. Right. Today's market's a little bit different because there is debt. Now, although, there's been a huge run up on refis that, banks are dealing with right now, and rates actually ticked up because of that. I would imagine that'll solve itself to some degree over time as well. But as long as you can get debt, I think deals are going to continue to happen. The frequency and the velocity in which those happen obviously is going to slow down.
And you know what, your comparison to 2008, 2009 credit crisis, what's so unique is this feels like some kind of a mad child of what happened in 9/11 and what happened in 2008, 2009. And what I mean by that is in 9/11, everything shut down. 2008, 2009 credit crisis, we didn't have global economic, social, and business shutdown, but in 9/11, the city did shut down, and everyone for a few weeks and even months. It took a while to get back to normal, but everyone was scared about, buildings were getting evacuated at that time. Everything just kind of hunkered down kind of thing. And this is totally different, right? This whole virus thing is a completely different this is a global kind of economic shutdown. And it's we got this both, and it took a year. It took a year to get back from 9/11 shutdown. I don't think we fell dramatic. I mean, the credit crisis was a dramatic lift dive. I think there were some deals happening 30, 40% off in early 2009, and yeah, if you paid cash at that time, you were getting some amazing deals at that time. I don't think we're not falling like that. 9/11, I think we fell, 15, 20%, anywhere between 10 and 20%, depending on the product and situation and the pricing, like you said. And it took about a year to get kind of back to where we were before 9/11 happened. I remember because I bought at that time. It wasn't a planned thing. It was just I was looking to buy for a while, and I found a great place, and I was scared out of my mind. I bought in October 2001. I signed a contract. I was scared out of my mind. So I was following it. It took about a year to get back. So this time's a little different. I just, at this point, I wish everyone's safe, Yeah. But if you had any words, I totally agree with the opportunistic buyer. I think the opportunistic buyers out there are coming out there. And Russ, look, I don't know if you can see the screen.
Yeah, I see it.
We were at the bottom of a 5-year downturn, and we were just coming back.
Right. That's what's so interesting about this whole thing. From a real estate market perspective, it almost felt like, right, if you remove what's happening right now from the equation, it almost felt like we were coming out of a buyer's market. I mean, the January and February market was on fire, right? And then all of a sudden, things like this happen. And so what's so interesting about this from a real estate perspective is New York City was in a buyer's market. Almost the entire rest of the country has been in a seller's market, right? There's been this talk about, a potential looming recession over the last couple of years. Well, now we're going to get it, right? And how does that affect this market further? What do we see in trading? How does it affect the market nationally? It's going to be, it's just a very interesting time.
Yeah, it is. All right. Well, I mean, I think on that note, I want to end it over here and keep it short and sweet. But I really do thank you for your time. Thank you for coming, Russ Putterman. Thank you, John, for setting this whole thing up and doing the remote settings here.
I'm glad it worked.
Yeah, glad it worked. And we're going to be
we're going to be doing this for the foreseeable future. So, glad everything works. I'm glad the internet is here because, I mean, imagine this environment without the internet.
It's amazing.
Yeah. And there's a lot of agents, there's a lot of great agents like you that are out there, and they want to tell their story about what they're seeing, and they're seeing different things. And I think it helps all of us in the industry to kind of understand, oh, that's what they're seeing, that's what they're seeing, that's what they're seeing,
Sure.
in order to kind of just get our narrative right for our clients. And at the end of the day.
Just one quick question to Russ before we go. Russ, how do you keep your team machine running here in a sort of a pause environment?
Yeah, it's a really good question. I mean, look, I run a business, right? It's like it's a small business on a platform, but I'm getting really, really mindful about, number one, as a business, what we're spending money on, okay? Because that's a really important thing. We want to be able to weather the storm and get through to the other side. I'm in constant communication with everyone on our team. We're getting on video calls, and we're making sure that we're doing all the activities that we need to do. We are a very heavily goal setting based and time block form team. So we're making sure that we're sticking to those activities. That's great that you can't leave your house, so you're not leaving your house, but still get up at 5, do what you got to do, and start the day, do your thing. So we're having those kind of conversations. And then we're just being really, really mindful about the transaction. Like right now, we don't know where the next transaction is coming from. We never do in this business, right? And it's important, certainly during this time. So we're just getting very, very granular on every single transaction that we have out there to make sure that, it can go to the next level. And we're having good conversations with the other agents and our clients and the attorneys on the deal to make sure that we're staying ahead of anything. And, one thing is, this idea of having remote closings, right? Because who knows what's going to happen. So I had a conversation today with a management company and an attorney. What are they planning on doing? How can we make this happen? Let's stay ahead of it just in case that this is something that we need to do. Those are all just really important aspects of how we're able to, keep going. And listen, just have conversations with people, right? I mean, see how they're doing. This is the new reality for the foreseeable future.
Well, it's great advice. Stay in touch, stay ahead of the curve, and hopefully things will work out for the best as we sort of all emerge from this together.
Yeah.
That's right. Yeah, we got to beat this thing, and we will beat this thing. So thank you so much for your time. Stay safe out there. Everybody stay safe out there. Thank you, Russ Putterman. Thank you, John Walkup. This is Noah and John. We're talking Manhattan. We'll be doing this all week, and we'll catch you next time.
See you, Russ. Thanks.
Thanks, guys.